Hello, everyone. Happy Thursday. How is everyone doing this morning? Hope everyone is fantastic. Let's see. Let's see. Was that the first one? Think we have time to decide. They're going to cut in September based off the FOMC minutes and put them being out there now. It really shocked the markets if they don't. I don't. You know what? Doesn't matter. They're going to do what they're going to do. Generally, the rate cuts aren't positive for the market, but yesterday's revision, removing the 915,000 jobs that weren't actually created, that's a biggie. That's a biggie. So it looks like RFK is going to drop out. We'll see that tomorrow. Trump's having a rally here. Well, not here, not in Scottsdale, but over in Glendale. Good morning, Patrick. Peloton numbers. Peloton little gap up. Some of these things like connected subscribers dropping. I don't know why it's gapping so much. They did do a little beat, still losing money, and but I guess for a $3 stock or whatever it is trading now. Oh boy, yeah, Fed Schmidt. Let's see. Asked about job benchmark revision, saying it doesn't change a lot. Well, we'll see. We shall see, won't we? The cut, oh boy, that'll again. They cut in September, get Trump's panties in a bunch. He'll want it. He doesn't want it cut until he wins the election, and then he wants to drop to zero. So, uh, it will be interesting. Good morning, John. Good morning, Jacob. Let's see. Let's see. Boston Fed President Collins soon as appropriate to begin cutting rates. Data will guide the pace of rate cuts. So now we're talking the pace. The market's still pricing in like 100 basis points by the end of the year. Good morning, Chris. Good morning, Royal Palms. Good morning, Ted. Hello, Charles. Hey, Richard. The Fed's call is not seeing red flag in consumption data. I think consumption is dropping pretty quickly, though. One of the indicators I watch, I specifically sign up for mailing lists and deals for your restaurants like the Panera and stuff just to see. I'm getting inundated like every day. Coupons, deals it's like, and the Panera's been running this thing, buy it. Like anything over $5, get a free half sandwich if you type in the coupon code. So I can get lunch for myself and my wife for like $7. So that's three. It's actually cheaper than making it at home. But I'll go in there and it's not full, and then I can go check out and get my iced tea, and they're like offering me brownies and cookies for half price and everything else. It's like okay, and that's just one place. So I'm seeing it drop off pretty quickly compared to a couple months ago. All right, well, that's just something I followed for years because when stores and restaurants start offering more and more deals, more and more coupons, and they're still not getting the foot traffic, consumption starting to fall off. But that's enough about that. Lots of ice cream sales, my weakness. Lots of ice cream sales. Oh, well, there you got it. And that's Richard's weakness. And now they're putting it on sale, so be careful, Richard. Take advantage of it, though, while it lasts. So what do we have here? We have the Chicago Fed National Activity Index coming in negative. Worse than forecast. Way worse than consensus. Way worse than previous. Initial jobless claims roughly in line. Continuing jobless claims roughly in line. So nothing shocking there. In 15 minutes after the cash open, roughly 35 minutes from now, we got the S&P Composite Manufacturing and Services numbers. Manufacturing is still expected to be below 50. The others still expect to be above 50. So I'll be keeping an eye on that. We got existing home sales. We got Kansas Fed Composite and Manufacturing Index. We got some 4 and 8 week bill auctions. We got mortgage rates. And we got Jackson Hole continue. So, and then tomorrow, remember, we got Powell speaking at Jackson Hole. What else? Good morning, Anissa. Am I still bear? Long term, I'm bearish equities. Short term, we have we're still in bounce mode. I'm still bullish gold for the time being. Yeah, I think if equities crap out. Long term, we don't have the major sell signal in gold yet. If equities crap out and trigger like this, some of these massive double tops, you'll get a pretty quick selling in gold because of it's rallied so much. So that's where we sit. But once we got above that 62.5, short term is bullish in equities. Medium term, we never got below the weekly rotation zone, and we've never triggered a sell. Long term is based still off of things like valuations. We're still in nosebleed territory. That's why for longer term stuff, unless you absolutely love a stock, long term, still taking advantage of things like bills. Besides stuff don't want to drop from the portfolio, stuff like gold, key things that aren't insanely overvalued. Other than that, what do we have? This morning we have Nvidia still chugging towards that 87.5 level before earnings. And you got Broadcom up. Total chips are up. Mostly mega caps are up. It's just grinding higher at this point. Technology, consumer cyclical, the only thing down is basic materials. Only thing down a little pullback in at least gold and copper so far this morning. Fed Watch still has the 71% probability of a single cut and a 28% probability of a double cut. Fear and greed, we're finally to the upper end of neutral. We'll probably pop into greed before at least the next potential rollover, but it's not there yet. In terms of earnings, I did not look at advanced auto parts this morning. I've been too busy, but Sterling put in Peloton results, and we did have a little gap up on that. Earnings are winding down this week. There's nothing much to talk about there. Morning, Heinrich from South Africa. All right, so S&P completed the 87.5 yesterday. Now pushing through that. The next level has not changed. 5680 area, 5681. Then 5721.20 area, which would be to retest the highs. On a breakout, 5796, 5871. In potential double top territory, which may never trigger. And if it moves beyond 5871, that would be off the table longer term. You can see here, we got the percent B buy bounce, which has continued to follow through, setting up potential. The other thing, if you're wondering, the other thing I'm watching in more of the medium term is if we did roll over, and these levels will change, but close below 62.5, because that could be a front run for potentially triggering the double. Other than that, we're still with the rotation zone. Now, one other thing I've talked about, we got the double cross pattern, which is a correction on the higher time frame, so when it crosses down and back up. If we get a relatively soon double cross pattern again, it's another significant warning sign that a top's coming in. We don't have that yet. And it'll be interesting because we could push to new highs and we'll be getting another massive divergence. So each push high now is waning momentum. But you just don't dump anything until you get a confirmed sell signal. Also, oops, didn't want it over there. Let me just adjust this. Also, look at this volume. Look at this volume just drying up. This is turning into an incredibly low volume bounce. So we're going to have to see if volume picks up as it approaches the high area. Yes, the VIX did drop like a rock. It's now slightly more elevated, sitting just above 16. Still think there's availability to put on hedges going into September and mid-October for my because it can always still be hedged, especially if the VIX drops even over the next week or so below 15 again. NASDAQ approaching the 75 level, this 20,075, which is a 75 harmonic, and this prior little bump up high before the cascading sells. So that would put the NASDAQ in potential double top territory. Wonder if that happens. We'll have to switch this back, but if that happens, and I'd switch it also to conservative ones on this, but that could easily return it to, if that were to trigger, we could technically wipe out all the gains from last October. That would be fascinating, but may never trigger. May just keep marching higher in the short term. Valuations, though, are just insanely off the charts. So, everything's priced for perfection. So in the short term, you still got to go with the trend going up, but know where the stops are. Know where your stops are. The percent B buy also that followed through back above the 62.5 and now marching higher. Now the NASDAQ is weaker than the S&P, but I'm still going to be watching, especially for it to at least tap the 75. If it gets through there, next target area I would be looking at would be about 20,400 to about 20,530. The Dow, very strong resistance. This is a very significant level, this 41,100. If it pops through there, especially even on intraday, 41,281. I'm paying very close attention for that for a potential breakout move. The only thing that I'd be watching for any pullback on the Dow is that gets below 48.50. Russell, that's key, very strong resistance at about this 2187 area. If it gets through there, 2197.6 is very key, and above there at 2,200 is the prior breakdown zone. There's your VIX. Still, anywhere, even if it can drop to the 15, that's where I'm watching for any additional hedges, but that was just based off the market, probably taking out or encroaching the most recent highs, especially the S&P. Your DAX connecting with the 75%. Very strong resistance in the DAX, by the way, about 18,630. If it pops through there, you see the magnet price of 18,780 probably very quickly. And that's also not just because of the 87.5. That's some major resistance in that area. So pay attention to that. Your notes breaking out of the little triangle and retesting the highs, which is what I've talked about with triangle patterns, why they're so difficult to trade, because you have to keep very tight targets because they can turn into something else. You can see that with the yield. Little pop in the yield today, but you see yesterday closing. The yield on the closing basis yesterday was 3.772, and back on the 5th when it was disaster time, it was 3.78. Okay, but still not down enough to form a sloppy bottoming pattern. It'll probably just keep growing, especially through Powell's speech tomorrow. 10-2s, a little pop in here, but nowhere back to that zero area yet. Dollar index coming back down, retesting this very key area we've talked about, very key support. No, nothing but a bounce pattern just yet. I'm paying very close to that 100 mark. Because if it breaks through there, you could see a quick trip lower, especially to some of these bottoms of this sort of channel and that 200 area, which is funny enough, the 200 on the weekly is coming in right at 100. So I'm paying a close attention to that also. What else? Crude. Nothing yet against very key support. If it breaks this very key support, next level is 70, but there's no strong bottoming pattern yet. Anything would be watching for a bounce, and very strong resistance now back at 73. Some of these things still need to make better setups. There's just not a lot. Gold, still pausing at the rotation zone. Now this is starting to get more and more waning momentum up here. But we have a pretty significant potential divergence up here, but nothing else to talk about. No major topping pattern yet from the longer perspective. On a pullback, key level I'm watching is about 2,500. 2,500 on the pullback. Silver still hasn't invalidated the double after hitting the first target. It would be nice to get this out of the way. It'll also be nice to get through NVIDIA earnings next week, because I think that's going to be the next major thing. Yen, nothing to talk. Sort of a wide range bar yesterday, so I'm paying attention to the high and low, especially the low of yesterday. If that does take out a potential return to about 142.62. Paying very close attention. It pulled back between the 50 and 62.5 on the harmonics and a little bounce here, but going to still be watching for potential rollover plays in the short term. Euro taking out the highs. Taking out the highs from December. So now we get to flip this. Not yet to the next harmonic. So especially with the dollar closing in on this 100, that's why I think the dollar is really going to close in on that 100 mark, because on any pullback, this 111 is now major support with the rising rotation zone. That does not mean it has to necessarily take out the highs from July of 23, but that's going to be a very strong magnet area, especially with the dollar returning to 100 potentially. Spiders. It's the next key area there. Remember, there's still to the open price of the 16th of July. Pay attention to that if you're trading spiders. 562.87, and then the gap fill to the close, 564.86. Those are the two magnet prices. Okay, if it does go to new highs, 572.02. The Qs hitting the 75. The Qs have confirmed a double, and you can see it even with the aggressive targets on the Qs. It would be straight back to October lows if that were to ever trigger. Still, prices 488.50 is very key in the Qs to the upside, and then it's at 493.51. Bitcoin, still caught in a range. Ethereum, still caught in a range. What else? Nothing to talk about with Tesla. NVIDIA, still 134.50 area, trading 130. There was significant resistance at this 130, and it's looking to possibly pop through that today. So I'll be keying off that 134.50 price. Really, that is about it. Just grinding higher. I mean, you got Powell's speech tomorrow, and there's not much stop in the markets on this short grind higher. You had the volatility yesterday with the revisions, but then it's just buy the dip and run up. So we shall keep an eye on that. I mean, in order for me to start sitting up and taking notice to the downside, it at least has to drop back below 56.40. At least, and that would only be a minor pullback yet. The major level is 5,600. If we start getting back below 5,600, then I'll watch for a starting with a bigger pullback. And the bigger pullback levels now made massive support base off the daily is at 5,500. So this, what was some very key resistance, is now turned into very significant support even on any pullback. It would have to burn through all that before I'd even start to get more bearish, and then I'd be watching that pullback, to 50% of this up rally. But we're not even remotely close to that yet. So that's where we sit. There's not much else to talk about, so I'm going to let everybody get on with their trading day. Thank you for tuning in, and we will be back tomorrow to wrap up the week with Friday and Powell at Jackson Hole. Until then, talk to everyone later. Bye for now.